There's a powerful financial system operating silently in the background, invisible to most people, unregulated by any government, and beyond the reach of central banks. It doesn't exist on the Federal Reserve's balance sheet, and yet it's entirely dependent on US dollars. This is the Eurodollars system. Most assume that if you control your central bank and your currency, you control your economy. But the real world isn't that simple. In reality, global finance is governed by an offshore dollar-based network, a parallel universe where trillions of dollars flow outside US borders, away from regulation, and with no official oversight. This is where shadow banking operates, a vast ecosystem of non-bank financial institutions that lend, borrow, and leverage massive sums without being subject to the same rules as traditional banks. Together, Eurodollars and shadow banks form a dark circulatory system of global liquidity, and when something goes wrong here, it doesn't just affect one country. It brings the whole world to its knees. To understand this, let's rewind to the Cold War. After World War II, the US emerged as the dominant economic power, and the US dollar became the world's reserve currency. But geopolitical fear, especially from the Soviet bloc, led many countries to hold their dollar reserves outside the United States, mainly in European banks. This wasn't about evading capitalism, it was about avoiding confiscation. These dollars, now held in foreign jurisdictions, were still dollars, but they were outside the control of the US Federal Reserve. This birthed the Eurodollar market, not euro as in the European currency, but euro as in offshore. It refers to US dollars held in banks outside the US, beyond the Fed's monetary policies, reserve requirements, and capital controls. Over time, this offshore system evolved from a geopolitical workaround into the beating heart of global trade and finance. The Eurodollar system exploded in scale because it offered something irresistible: freedom from regulation, higher flexibility, and dollar liquidity in parts of the world where it was scarce. European banks began lending these offshore dollars to foreign companies, governments, and financial institutions. Unlike domestic banks in the US, these players didn't need to hold reserves at the Fed or follow its tightening policies. The system was fast, cheap, and outside bureaucratic red tape. By the 1980s and 1990s, this shadow dollar system had grown massive. By some estimates, the Eurodollar market today is worth tens of trillions of dollars. And that's just the visible part. No official data tracks it comprehensively. It's a system too big to ignore, but too opaque to measure. That alone should concern anyone who thinks global finance is under control. Now, layer onto this the shadow banking system, investment banks, hedge funds, structured investment vehicles, SIVs, money market funds, and other entities that perform core banking functions like credit creation and maturity transformation, but without being regulated like banks. Shadow banks borrow short-term money, often in Eurodollars, and lend long-term, much like traditional banks, but without central bank access or deposit insurance. They rely on market trust and liquidity, not regulatory backstops. In good times, they amplify growth and liquidity. But in bad times, they become the ultimate weak link. And because shadow banks rely heavily on Eurodollar funding, the two systems are intertwined. They feed each other, scale each other, and collapse together when things go wrong. Here's the terrifying truth: every major economy on Earth is exposed to this system. Whether it's a Japanese trading house, an Indian infrastructure project, or a Latin American commodity firm, chances are they're funded by Eurodollar borrowing through offshore markets. That means their ability to function relies on dollar liquidity outside their own central bank's control. This creates a deep vulnerability. When offshore dollar liquidity dries up, local economies suffer, currencies collapse, and inflation spirals. And the local central bank can't fix it, because they can't print dollars. In effect, the global financial system is addicted to dollars it doesn't officially possess, controlled by institutions no government supervises. This fragility became painfully obvious in 2008. In the lead-up to the crisis, shadow banks like Lehman Brothers and Bear Stearns had borrowed heavily from the Eurodollar market to fund mortgage-backed securities. The system was highly leveraged, interconnected, and completely reliant on cheap, short-term dollar funding. When U.S. homeowners began defaulting, the collateral backing these shadow bank loans collapsed in value. The funding evaporated. A run on the shadow banking system began, and because these entities weren't part of the traditional safety net, there was no lender of last resort. The panic wasn't just in New York. It spread instantly to London, Frankfurt, Tokyo. Offshore banks holding U.S. mortgage exposure faced a dollar shortage they couldn't fix. And because it was the Eurodollar system that had greased the wheels of this expansion, its collapse triggered a global liquidity crisis. To prevent full collapse, the Federal Reserve created emergency dollar swap lines with foreign central banks. These weren't bailouts, they were survival lines. The European Central Bank, Bank of Japan, and others would send their local currency to the Fed and receive US dollars in return. Those dollars were then funneled to local institutions to keep global trade and interbank funding alive. But think about what that means. Foreign economies had to be saved by a central bank they don't report to. In effect, the Fed became the central bank of the world, not by design, but by necessity. The dollar system is so globally entrenched, so offshore in structure, and so crucial to credit markets that no economy can afford for it to fail, yet no one truly governs it. This isn't just a historical curiosity. The Eurodollar system is still very much alive. Every time there's global stress, COVID in 2020, banking tremors in 2023, or dollar spikes in emerging markets, the underlying issue is always the same: offshore dollar funding disappears, and central banks scramble to prevent collapse. But each time this happens, the question grows louder: what happens when the Fed can't or won't step in? Because if the Eurodollar system breaks and there's no coordinated rescue, it won't just be a financial crisis. It will be a global seizure of credit, trade, liquidity, and trust. The world has built its economy on a foundation that no one owns, no one regulates, and no one can fully map. That's not just risky, it's existentially dangerous. The Eurodollar system and shadow banking aren't side notes in economic textbooks. They're the dark matter of global finance, invisible but holding everything together. Their scale, complexity, and lack of oversight make them both incredibly powerful and deeply fragile. And as long as the global economy depends on this offshore dollar web to survive, the next crisis is only ever a liquidity squeeze away. Understanding this is no longer optional. It's the key to understanding why the global financial system behaves the way it does, why central banks struggle to control outcomes, and why the next big crisis won't start with a local bank run, it'll start in the shadows.